Hello everyone and welcome to the Investing Angles channel. In today's market waves, we will discuss quite a few things. First, we start with volatility and evaluate candles for Volatility Index VIX and its futures VX. After that, we will move into bonds and TLT. We'll have a look how the yields are progressing today and what kind of impact they might have on the TLT and its perspectives. After that, we will talk about major US indices, the candle map, and Elliott Wave charts. We'll touch point on S&P 500 sectors and some large stocks like Apple, Microsoft, and Google. After that, we will deep dive into Nasdaq and Dow Jones Elliott Wave charts. And two specials today, we will discuss Bitcoin and Tesla. If you're ready to start, hit the subscribe button and let's begin. This is the Volatility Index, and on your left is the index itself, and on your right it's Volatility Index futures. So what we are seeing here is fairly uncertain closure. I cannot say it's bearish, but I cannot also say that it is very bullish. It is leaning bullish slightly, but we need a strong confirmation. Why? Because we have a fairly strong green candle on Friday, and this candle was attempted to be cancelled, and today's candle another failed attempt. And by the way, in the meantime, if you have a look here, these the blue and the red lines, this one, the blue and red lines, they crossed today in a bullish cross. This is a 50-day over 200-day moving averages. So it could be a significant move, but we need to see what kind of confirmation the candles provide. And if we look at the bigger frame, right now it's also inconclusive. First of all, after this big red candle, we didn't have any confirmation for a move down. So far, it's closer to neutral rather than bullish or bearish. And speaking about Volatility Index, we had a contract switch here today, but nevertheless, candle were able to hold here, and this green candle is practically a doji. It could be either a topping pattern or a continuation pattern. Again, this is very close to neutral, and if we look at multiple technical elements, I would say that this is closer to bullish, slightly bullish. And note that this candle climbed over the 100 days moving average, which is a fairly significant event from technical perspective. All right, so that's volatility. Now let's move on to the Treasury's Department. What we are seeing here is a fairly nice green candle map for 2, 5, 10, 20, and 30 years yields. For 2 years is mostly consolidating just before the move higher. Most likely this is the second consolidation attempt here over the neckline, potential neckline for double bottom here, and the red line is 200 days moving average, which would be a significant for the 2-year yield. 5-year cross today, 100 over 200 bullish cross, and technically confirmed a move higher. For 10-year, we will talk in the next chart. 20 and 30-year are aligned for a move higher. So let's move on to TLT. TLT right now is technically bearish from Elliott Wave perspective, because this wave of the bottom on January 10th has been corrective so far, and right now there is a chance that TLT is forming an impulse down. If it breaks through this boundary line, I would say that the path from Elliott Wave perspective, the path would be open towards either purple rectangle, or there is also a chance for the bigger correction ABC before the next move. And from the candles perspective, what we are seeing today, we had a technically reversal pattern, and another red candle moves down. So the chances for a continued move down are fairly high at this moment. And yesterday, TLT lost the 50-day moving average support. On the 3-day candle, which is closed today, it's a clean bearish harami, and if we have a confirmation in the next 3 days by Friday, well, it could be a bigger reversal. And if you're looking at the weekly frame right now, it is tracking for a bearish engulfing. But there are still 3 days to recover from it. And speaking about the 10-year yield, pardon, what we are seeing here is that the candle today is likely close above this red line, which will form a strong bottom on the daily frame. 2-day candles are solid bullish, and they are climbing above another resistance. Now is going to be support line, and the 5-day candle will be closing if in a bullish engulfing combo in 2 days. Well, that's the perspective. So the yields are poised to go higher, and TLT respectively has better chances to go lower. Now let's move on and have a look at the daily candles, daily closures of the major index ETFs, SPY, QQQ, DIA, and IWM. Now what we are seeing here is that after a very strong bearish candle on Friday, we see 2 attempts to negate it. The same for Nasdaq. The chances now slightly with bears, because technically the second candle needs to negate the combo. But right now, even though I would say that tomorrow we still can have a green day, better chances for this, especially if you look at the Dow Jones closure. It closed with a bullish engulfing, but I would say that the odds are barely bearish, closer to neutral. So we still need 1 or 2 days for a decision to be made. That's the perspective of candles. And if we look at the futures closure, most likely Nasdaq is going to go higher tomorrow. S&P is unsure at this moment, and Dow Jones is forming a thrusting line, which is a bearish continuation, and Russell is closing with on neck pattern, which is also a bearish continuation candle, especially after the previous bearish engulfing. So only Nasdaq has a reasonable chance to move higher tomorrow. The other 3 are very questionable. All right, so let's move on and see what else is happening here. This is our technical MACD cross 10-day chart. What we have been monitoring so far is this particular cross. We can see it is expanding despite the move higher today, and this candle is closing on Thursday in 2 days. It will be crucially important for this one. We'll see if we see a strong move up, and the potential for the cross to reverse. This would be a possible resemblance of this point that in history that after the first attempt, the MACD line recovered, and it lasted for another 5-6 periods, which is about 2 months before the significant move started. So possibly this is the same thing, but at this point I cannot reject this possibility as well. So if we see by the end of Thursday a significant move down, most likely we are on track for a reversal, for a bigger reversal. Speaking about S&P 500, this is our long-term chart, and it is still undecided. So this conundrum of waves up and down, it's still unclear. It could be either green path or the red path. Both of them are remaining on the table, and both of them have approximately equal opportunity for now. All right, so from the perspective of the short-term chart, this is what we have been tracking. No changes here. There is a possibility for a blue path, ABC. The purple path is also valid right now, and I also keep on the back burner the potential for an all-time high with an ending diagonal. So doesn't look like any other formation can reach all-time high other than the ending diagonal, which would take another week or so to unfold. Now let's have a look at the major sectors. So what we are seeing here, first of all, financial is bearish. This is bearish continuation candle. It's not high enough to be bullish. The other ones, industrial, technology, consumer staples, and utility, they are bullish and have better chances to move up tomorrow. Energy is kind of neutral, and this is an interesting formation here. So it could be either bearish or bullish depending on the next candle. Consumer discretionary seems to be falling, and healthcare is undecided, so this candle could be either bullish or bearish. And the next chart we have here is large stocks. What we are seeing clearly here is that Tesla is falling, and falling hard. Today it lost 100 days moving average, and Tesla is our special feature today. We will talk about it a bit later. Apple disappointed at the end of the day. At the beginning, it had a magnificent chance to form a tower or even a double bottom and close above the 100 days moving average. However, bears pushed it back, and now it formed a mediocre bullish candle, which the odds are still bullish, but barely. Speaking about Amazon is kind of neutral, and Microsoft is also neutral, so it needs a confirmation. If you look at the 3-day candle for Microsoft, for example, this is clearly bearish, with a good chances to see lower prices by the end of this week. And speaking about Amazon, 3-day candle is neutral. We have 1, 2, 3 dojis at the top. Potentially it could be a topping pattern, but again, it's difficult to call right now before seeing the next candle. NVDA was very good at the beginning, but it resolved with a bearish, technically it's bearish harami, although it's not very strong, but this could be a bearish continuation to this one. So far it's neutral. And Google, speaking about Google, the daily candle is neutral, but the 3-day formation is clearly bearish. We have a very strong bearish engulfing, and we have a confirmation of this bearish engulfing. So Google is set to decline. All right, so now let's move on to Elliott Wave charts, and let's talk about Nasdaq. So Nasdaq, no changes since yesterday. The same the same potential path, A, B, A, B, C, and this could be an impulsive wave down if we look at the blue counts. The other ones are also on the table, A, B, C, and in a similar one that I discussed for S&P 500 is ending diagonal, which would take another week or so to develop. So far, it's more like neutral. We have corrective waves in both directions, and we are waiting for a very clean and clear signal regarding the direction. And now let's move on and have a look at Dow Jones. Dow Jones has been the most accurate so far, and the most informational from the Elliott Wave perspective. So we are seeing both directions have corrective waves, and I think that the most typical path would be to hit a little higher and complete either wave 2 or B in blue or red. However, as the other three, we are keeping this potential ending diagonal on the table. So there are these chances. And now let's move on to and see what is happening with precious metals. So we discussed gold earlier with the perspective and recorded a video about it. So far, this candle is undecisive, but it could be a reversal one. The most concerning development right now here is in silver. And if in 24 minutes silver closes below the green candle, that would be below the body of the green candle, it could be a fairly significant impact, a fairly significant signal. All right, so that's a quick look at the commodities. And now, by the way, coffee, this is the coffee contract. So today is a very strong dark cloud cover. If tomorrow coffee closes below the low of today, or either today or yesterday, it would be a reversal. Just keep this in mind. Now let's move on to our special features and talk about Bitcoin. So Bitcoin is potentially moving down, and today it attempted another try to break through the 100 days moving average, which is a purple line. And if it succeeds, well, it will be a very significant event. We identified this double top at the beginning of February, and so far it is slowly but surely moving towards completing it. Let's see how it goes in the next couple of days. Today, candle formed 2-day frame is likely to be either bearish or a neutral candle, waiting for most likely consolidation before moving lower. And speaking about the biggest technical event that happened on Sunday, Bitcoin recorded this MACD bearish cross on the weekly frame, and right now it is falling down. How far and how sharp the move would be, we don't know. All we can say right now that the average decline after these big crosses was 53%. It means that it wouldn't be surprising if Bitcoin ends in the range of 48 or 55. In other words, loses half of its value. All right, so that's about Bitcoin, and now let's move to Tesla. So Tesla is falling hard, and this was our call on January 21st when Tesla was 420. Now it lost almost 100 points since then, and it's down 22%. So far, it is following the channel, the chart, and it's already in the red target area, which would allow us to consider this wave as wave 3 rather than wave C. Let's see how it develops further. And one of the events that triggered this decline was a bearish MACD cross on the weekly frame. We just discussed it 2 minutes ago with Bitcoin. And so Tesla is already experiencing the consequences of the cross. Bitcoin is not yet. Let's see what will happen in the next couple of weeks. That will be very interesting to watch. And now let's have a look at the bigger chart. This one we shared way back in January 11. Oh, that's exactly a month ago. And what we are seeing here is a potential ABC formation. Wave B is either WXY or ABC, ending with a potential ending diagonal, and that's completion with an ending diagonal explains the very sharp move down here. And if this indeed a diagonal, then 140 wouldn't be a surprising move, a move towards 140. Whether immediately straightforward or like in a bigger formation, like in 1, 2, 3, 4, 5. But so far, Tesla is forming an impulse down, and this is a good attribute either for wave C or wave of a bigger degree. I don't even want to go into that area right now because it's a bit early. Speaking about the candles, candles are somewhat disturbing. As I said already, Tesla lost its 100 days moving average, which is a purple line. On the weekly frame, we discussed it in the weekly report that Tesla formed a double top by closing the last week below this line. And right now, no surprises, Tesla is just falling down. If the momentum continues and Tesla doesn't recover by the end of the month, it has a very good chance to form a big tower top on the monthly frame with a perspective to move much lower. And yes, that's everything that we wanted to discuss today. I hope you enjoyed the session. If you like it, just say so. Support us with your likes, with your subscriptions. Follow us on Telegram, on Twitter, on Reddit, and your other platforms. Check our website, investingangles.com, for more information, for weekly reports, and we have a free reader subscription right now. You can evaluate some of our work for free. Thank you very much for watching, and happy trading, everyone.